I've gotten questions about what chart setups and patterns I look for when day trading, so that's exactly what I'm going to show you right now. But keep in mind, this alone isn't a strategy. These are patterns I look for within my strategy. I specialize in day trading stocks that gap, so these are the setups I scan for inside of these gaps, okay? And there's really only 4 patterns I scan for: the buy setup, the breakout, the climactics, and the 1, 2, 3 pattern. Now, technically, there's 8 if you want to count the short side as well, but it's the exact same thing, just to the flip side. So let's just get one side down first and focus on the longs for now. But before we get into the patterns, let's make sure you understand how price moves and corrects itself. Because price doesn't just keep climbing up, and up forever. At some point, it'll make some sort of adjustment before continuing its move, right? So there's only 2 ways price corrects itself, and that is either through price, meaning the price pulls back before continuing higher, or through time, where the price bases or stalls before moving again. So let's start with the buy setup. This is a setup we get when price corrects through price, so by pulling back. So the stock has to be on an uptrend, and what we want on the pullback ideally is around like a 50% retracement of the previous move. And you want it to be made up of multiple lower high candles. Lower high means the highest point in the candle is lower than the previous candle's high. So this bar's high is lower than the previous bar's high, and this bar's high is lower than its previous bar's high, and so on. And we want to see it consecutively. What we don't want to see is something like this, where it's already taken out a prior bar's high and chops around on the pullback. We also don't want the pullback to be made by one giant candle, right? We want to see multiple candles. If I had to throw a number on it, let's call it at least 3 lower high candles, because anything less than that is probably too shallow of a pullback to play as a buy setup anyway. And I like to use the 20 period moving average, which you'll see me use as the blue line, as kind of like a guide to show me when that price has corrected enough. So I like to see the pullback to be into the rising 20 MA and play off of it. Now, if it's triggering too far off the 20 MA, it may not have finished the correction just yet and fail on that initial buy setup. And if it's too far below, it tells me it's most likely not a correction, but a possible failure in the move. So I wouldn't be really interested in that point in time. So we got the uptrend, we got the pullback with multiple lower high candles to the rising 20 moving average. And from here, I like to see some sort of reversal bar that indicates it's trying to bounce. So that's the setup. The entry is above the reversal bar's high, and the stop is the pivot bar's low. The pivot is formed when a prior bar's high has been taken out, so it's pretty much the bounce, right? The pivot. And your first target would be the prior high where it pulled back from. Let's look at some real examples here. Here's a nice buy setup that formed off the 2-minute chart. This was TSM, which gapped up and rallied at the open. We get a nice pullback to the rising 20 MA. Now it's not quite right on the 20 MA, but at the open, the 20 MA will still be playing catch up on a lot of these bigger gaps, right? And then we get a bit of a bottoming tail there. Entry is over the prior bar's high. And as it triggers, we get to the first target, no sweat, and even beyond that. Amazing follow through on that buy setup. Here's another example. This was BBIG off the 15-minute chart. Now this one was a very deep pullback. So what you can do is let that first buy setup go. And if it fails, as most of these 100% retracements do, no harm, no foul. But if it holds and gives a secondary entry, now that's something we can look to do here as it gives more confirmation. Entry, stop, target high of the day. Now, of course, it could just go without you from the initial buy setup, but that's something I'm willing to let go on these deeper pullbacks, okay? But check out what it did. Pretty nice move. Here's one more. This is APA off the 2-minute chart. Now this one wipes out pretty much half the move with just 3 bars here. So a bit bearish on the pullback, pivots, but holds. Let that 20 MA catch up, entry, stop, and off it goes. So with the buy setup, you're going to see a bit more variations on it just because of all the different ways the pullbacks happen and alters the setup. But this next pattern is a bit more straightforward, and this one is called the breakout. This is where we see price correct through time. We see a nice rally up, but this time it doesn't pull back in price, but instead it bases, almost like a sprinter sprinting and resting to take a breather before running again. Now, how do I know when the price has rested enough? Again, I use the 20-period moving average as a guide. Things to consider: a breakout too early before the 20 MA catches up has a higher chance of it failing, because without the proper rest, it may run out of steam too soon. So either it produces a breakout failure, or it may not follow through as you'd like. And if the base crosses the 20, that may indicate something is wrong as well. But I'll show you when it's okay to still play it if it does do that later in the examples. But ideally, right off the 20 is what I want. Entry is above the high of the base and stop is under it. Your target is the prior resistance area on your chart. Let's take a look at some real examples. First, we have APPN on the 15-minute chart. We get the nice rally at the open, and check it out. It tries to pull back and it fails, and then it just bases at the high. Look how pretty that setup is. You wait for that 20 MA to catch up, entry, stop, and to infinity and beyond. And then this one is ZTO off the 2-minute. Not as clean as the last one, but strong move up and bases. Even has a little shakeout bar where it tried to break down and couldn't, and continues into that rising 20, and right on cue, it goes bye-bye. Now here's one where the base crosses the 20. Remember I said there's one way to still play the breakout even if it crosses it? Well, this is what you want to keep an eye on. So as the base crosses the 20, it may start trading inside it, under it, but if the base holds, and at some point the candles start to trade above the 20 MA again, without it dropping below, and you see the 20 MA start to curl up, then you can play that breakout. Because the 20 MA also shows us the momentum in price. So as it starts to catch under it, it means it's now ready for that breakout, and off it goes. So that's the breakout. Next is the climactic pattern. Now this one is the most difficult out of the setups I'm showing you because you'll be playing against the trend. It's always much easier to play with the trend, just like how it's easier to swim with the current rather than against it. But there are some opportunities here, okay? So counter trend plays, we're not playing after a correction, but we are in fact playing the correction. So here's what the setup looks like and what I look for. So I want to see a total collapse in price. It should almost look like a waterfall on the chart. And I want to see the bars getting bigger as it's selling off, along with the volume kicking up. Now, don't mistake this for something that's just down a lot, right? Just lots of red bars. That's not it. The point of this setup is to find exhaustion. So in this case, exhaustion of sellers in this move, so that all there's left is the buyers. And I see that not just from red bars alone, but from the volume and acceleration in the move. So with the buy setup and breakout, I wanted to see the candles pull to the 20 MA, but with the climactics, the farther away from the 20 MA, the better, because it'll give much more room to correct to that 20 MA when we get in it. So the entry is above a reversal bar after we get the biggest volume spike and drop. Stop is under that same bar, and target is the 20 MA. Let's look at some real examples. Here's a 5-minute chart on NTRA. Now notice in the first sell-off, we can see that it's down a good amount. It does give a reversal bar, but I don't see the volume and acceleration in it. So the move doesn't feel exhausted yet, right? So it tries to bounce and then fails and continues to sell off. Now this is what I want to see. We've got more extension off the 20. We get that volume kick up into a doji bar. Entry is above the bar's high and stop is under it, and target is to the correction to the 20 MA, but ended up even going beyond that. Here's another one. This is HARP, H-A-R-P, on the 5-minute also. You get the sell-off, acceleration away from the 20. You've got the biggest volume bar along with a reversal bar, and you just caught the bottom for the day. All right, one more. Check this one out. This is Geo. I mean, look at the size of those bars. Extension. You've got the volume also. If you have to squint your eyes, tilt your head, and ask yourself, is this climactic? Then the answer to that is probably no. Something like this, you can clearly see there's exhaustion in the move. And then at the bottom there, we get this tiny reversal bar, giving you a very tight stop, and look at the move you catch. Amazing. So that's the Climactic Buy Setup. But again, this one is not for beginners. So my recommendation is, if you are a beginner, to just stay away from this one for now. All right. And the fourth and last one I want to show you is the 1-2-3 pattern. This is one of my go-to setups I like to play at the open, and just a great way to catch moves on a secondary entry if you've missed the initial move. If you've seen any of my live trading videos, you've probably watched me play these a few times. The 1-2-3 is very simple. It's a 3-candle pattern. The first bar is the igniting bar, meaning a bar that starts the move. And then the second bar we get is a resting bar. And then the third is where we would enter for the continuation bar. So we call it the 1-2-3. The entry is above the last 2 bars high, and the stop is placed under the second bar or the resting bar's low. And for the 1-2-3 to be effective, you want that igniting bar to be noticeably one of the larger bars on the chart, and that resting bar, you want it to make up no more than like a third of that bar. You don't want to see that second bar be the same size as the prior bar, okay? That's not what we're looking for. That's not a resting bar. Common mistakes for this pattern is identifying it at the wrong areas on the chart. Just because you get a wide range bar and then a resting bar or an inside bar isn't all there is to it. Remember, the first bar is the igniting bar, so you have to make sure you see where it's coming from. For example, if it's coming from a rally higher already, it may not be an igniting bar, but an exhaustion bar, just like we saw for the climactics, which really wouldn't be the best place to enter, right? Whereas something like a breakout, that first candle is igniting the move and starting that breakout. So if you miss the initial breakout and then it gives a resting bar, this 1-2-3 is a great secondary entry to catch the rest of the move. Let's look at some real examples. This is GILT, G-I-L-T, off the 5-minute chart at the open. It gets that igniting move up, a resting bar, and as that bar closes and the third bar starts to form, that is your entry bar. So your entry is above the high, and you place your stop under the resting bar's low, and off it goes. And here's one used as a secondary entry. This is PIK. So there's your igniting bar. It's noticeably a large bar on this chart. And then a resting bar, which is actually right off the high of the day. And that continuation bar's trigger will also be a breakout of that high. And there it goes. And it actually ended up going climactic to the upside, as you can see. And finally, we have the Vion off the 15-minute chart. I found this late in the afternoon yesterday and scalped it. It has the pop over the high of the day off the 20, then gave a resting bar. Now, ideally, you don't want that second bar to be taking out the first bar's high like that. But this one is actually a penny stock, so that tail just looks bigger than it is. All right. So just wanted to point that out. Entry and stop is the high-low of that bar. And boom, got a nice pop into the close there. Okay. Actually, before I close this out, let's go over one that you may mistake a 1-2-3 for. So this is the TSM chart we saw earlier for the buy setup. So I can see there's a large bar and then a resting bar. So that must be the 1-2-3 pattern, right? So here it actually is not an igniting bar because it's coming from a rally off a buy setup. So the igniting already happened when that buy setup triggered and without resting popped into the highs there. So I may consider that more of an exhaustion bar than an igniting bar, right? Because it's coming at the end of the move rather than the start of the move. Now it ended up working in this case, but that's not the point. The point is to understand where that candle is igniting from. Now, if you're paying attention, you might be saying, hold the f*** up. The 1-2-3 on the Vion chart looks like it came from a buy setup. Yes, but this one did in fact base before that breakout. Again, this one is a penny stock, so the candles and tails look a bit deceiving. But if I put this line here, where price starts to consolidate into that resistance and bases to that rising 20, makes it a breakout, making that 1-2-3 valid. Okay? So it takes a little bit of awareness and understanding how to read charts before you can really benefit from all of these patterns. If you don't know how to read charts yet and don't know where to start, I'll link a very simple to understand video I made just for beginners about reading candlesticks somewhere on the screen here. So check that out. But yeah, those are the 4 patterns I scan for on my intraday charts. Remember, these alone is not a strategy. These are patterns I look for inside my gap trading. This was definitely more of a brief overview. There's so many other things to consider, like time frame alignment and market timing. I mean, I could probably have an hour-long discussion for each of these patterns alone, because you have to understand that trading isn't black and white. It's rarely picture perfect, and it's about being in the moment and understanding price action. Knowing these patterns is going to help, but you're going to have far more better success if you can master technical analysis in general. So make sure you're not just trying to learn patterns, but really trying to understand why price behaves the way it does, and everything else will fall into place. All right. If you found this to be helpful, make sure you hit that like button. If you have any questions at all, ask them in the comments below, and I will definitely answer them. Subscribe if you want more content like this one. As always, I appreciate you for being here, and I hope to see you on the next one.